Okay, I'm going to suggest that we kick off. I'm sure some more people will be joining along the way. Welcome everyone to one of what we hope is going to be a series of events this year to talk through DORA and its impacts to the industry. If we can just quickly go to the next slide, please. My name is Trevor Hunt. I'm CTO advisory at Behind Every Cloud. I'm joined and welcome Anthony, John, and Vinod from GEOM. They're going to be telling us about some of the solutions that are available. And from a logistics point of view, can I just ask that everyone stays on mute? We are recording this session, and we'll have Q&A received via the Zoom chat Q&A. And also we'll do something interactive at the end if you've got any burning questions you want to raise. Onto the agenda. So we're going to, after the introductions, we'll now quickly go into the news, and then we're going to switch into what is DORA, what actually is it, and does it apply to me as an individual working in financial services in a solution provider? What should I do about it? And as I said at the beginning, are there solutions, things that we can do that will help solve the DORA requirements as they come into force? We'll end with a Q&A at the end. Okay, so first of all, myself, Trevor Hunt, I'm a former CIO and CTO. I'm sure many of you have faced situations that have been somewhat uncomfortable, and it's failure. As leaders, one of the most important things we have to do is understand that we have to put mitigations in place against what happens in failure. We have to respond appropriately when it happens, and we have to learn from the outcomes of those failures, learn the lessons, learn what needs to happen as a result. Now, thankfully, regulators are starting to recognize that too, and they're taking resilience and how to handle failure very much to the fore of their thinking. In Europe right now, the regulators there have issued DORA, and I think it's very much an answer to the mass adoption of US hyperscalers across the globe. All of a sudden, many of the financial services organizations are depending on fundamentally US organizations for some of their core processes. Likewise, the FCA are taking this very serious too, looking at who the service providers are. We could go to the next slide, please. I've got a little story to tell where this was very real to me. About 30 years ago, I was working in a Japanese bank, and here's a picture of that system that we were using at that time. It's a trading system. It was called IDSS. And it was a great way of automating the trading processes and position keeping, etc. However, one night that company ceased to exist. They went into bankruptcy and affected something like 30 clients across the UK and European banking system. The code was available in escrow. So in theory, we did have a backup plan. But over the next 6 weeks, I was involved in trying to create a parallel system while we just ran on the executables. That's all we had. We had no source code. We had no ability to do anything with that source code. So we created a mirror system. Thankfully, we got it to work. But the one thing that happened as a result of that is I was working more or less 24 hours with another colleague. And as a result, I lost all my hair. I would not want that to happen to anyone else. And so having good supply chain and key provider resilience is a key thing to have, because you never know what may actually happen. Let's quickly look at the news. Here it is. There's good news and there's not so good news. The good news is if you're a financial services firm or key provider and you're already doing things like ISO 27001 and 22301 compliance as a target, or you've got that compliance in place, then you're already in pretty good shape as far as DORA is concerned. If you're a UK firm with only UK clients, DORA doesn't apply yet, but there's some nuances to that. Let's look at the not so good news. Many firms are nowhere near compliance with those ISO standards on the left-hand side. They're doing their best with budget that's available, but they haven't got these in place. There's still work to do. Also in the UK, the FCA has just started a consultation process around operational resilience. So it's coming soon to the UK too. So best we get ready for it. With that, I'd like to hand over to Anthony. Anthony?
Thank you, Trevor. And good to get some context from a real life story here, because this is exactly where the regulators are now aiming their guns, which is how do we provide resilience, security across the financial services sector to maintain daily business operations as much as possible, accommodating all of the risks that are out there, external and internal. So I'm just going to spend a few minutes giving you an overview of what DORA is. I've been living and breathing this for 6 months. So DORA is a EU-based regulation. It's been in force since the 16th of January 2023. So we're now just over a year into the 2-year period that have been given to the financial services market to get ready to comply. Full compliance must be demonstrated by January the 17th of 2025. So the clock is ticking, 12 months to go and counting. There are 4 draft technical standards that were released in January 17th, 2024, so just a few weeks ago. And they're just used for clarification of points that have been raised by the industry. The technical draft standards that were raised a few weeks ago mainly focus around the categorization of incidents. And there's another one, which is the final one, due in June of this year. That one's expected to provide further clarification or final confirmation of which suppliers across the supply chain are deemed to be critical, and anyone who's deemed to be a critical service provider into the financial services sector will be directly regulated for the first time ever by the European Supervisory Authority or their corresponding regulator at a regional level. So 2 years are being given for firms to get ready to plan to comply with DORA. DORA itself as a regulation has 5 key pillars. There are 5 key aspects that cover digital operational resilience testing, ICT risk management, ICT incident reporting, information sharing, and ICT third-party risks. So what you can really take from those 64 sections and 79 pages of the DORA regulation that cover those 5 key pillars, the key words here are digital. So this is a digital-based regulation. It's looking not just at the way that you operate your IT, but it's looking at the data that you use within that operation. It's looking at third-party supply risk, because there's a big dependency now on third-party suppliers that aren't necessarily European Union based or owned by a European Union company. The expected fines for non-compliance for a supplier will be up to 1% of your average daily global revenue. And the regulator will have also the power to withdraw or suspend your services if there is a series of regulatory breaches. And as a financial services institution, the fines are likely to be in the same scale and scope as GDPR, which is 4% of global revenue for a financial services supplier. So fairly significant fines. Non-compliance will be publicly noticed onto the regulator's dashboard, so firms will be called out for non-compliance, which obviously will have an impact on their reputational risk in the marketplace. So that's the DORA Act in summary. I'm now going to hand over to Vinod, Product Manager for GEON for DORA 360, who will give a little bit more detail on the actual scope of DORA for financial services. Thank you, Vinod.
Thanks, Anthony. So what we just saw is a brief structure of the DORA regulation. We looked at the dates around when these regulations come into force, and also the implications of non-compliance. Now let us look at the applicability of the DORA regulation. So DORA regulation is applicable to every financial entity who is providing their service in the European region. So be it the traditional firms like bank, insurance companies, credit unions, they are all mandated to follow the regulation. And also the non-traditional ones like the crypto service providers or the crowdfunding platform providers, they also need to be abiding by this regulation. One interesting difference which we have seen between the Digital Operational Resilience Act and the Operational Resilience Regulation from multiple other geographies is that DORA also is applicable to third-party service providers. So a third-party service provider needs to, there are certain clauses within the regulation which is applicable to these third-party service providers. It could be contractual obligations, audit requirements, inspection requirements, all of that is applicable to a third-party service provider. And if you are a critical service provider, then the obligations are higher. If you look at the market as a whole, there are close to 30,000 financial firms who has to comply with this requirement and close to 20,000 third-party service providers. So we are less than 360 days to from when the regulation becomes applicable, and there is a lot of regulation to be complied. Next slide. So the next big question, now we know the structure, we know the applicability, and I as a financial firm knows that this is applicable to me. The big question which every financial firm is asking is, what next? How do I move forward? Now, based on our experience and talking to a lot of service providers and financial firms for whom this is applicable, we've come up with a three-step approach. It really starts with assessment, where I look at the gaps. What are the things which are available within my bank or within my financial firm, and what is the expectation from the regulator? With that assessment process, the output of the assessment is I would clearly know what are the gaps. Once I know the gap, then I go and start implementing these gaps. Obviously, all the gaps cannot be implemented on day one. So as I start implementing one after the other, I improve my maturity levels. The one important aspect for DORA is regularly reporting to the regulator. So there comes the continuous monitoring. Regulator is not expecting you to monitor or provide operational resilience status for every service within the financial firm, but they are looking at critical or important business processes to be reported. So I need to report on the resiliency status of all my critical services or critical functions. Within the regulation, there is a lot of thrust on training and knowledge transfer. That's been a big area within the regulation. If you look at Article 5, it talks about creating a dedicated fund within the financial firm for training purposes. Or we look at Article 30, which talks about even training your critical or third-party service providers. Or if I look at Article 13, it says that you need to regularly provide training to your staff. You need to keep them aware on security measures which the bank or the financial firm is taking. So there is a lot of thrust on training, which basically means that is a continuous thing which needs to work parallelly. So we've kind of talked about the structure, the applicability, and the way to move forward. Now I would hand it over to John, the CEO at Geom, to talk about how the DORA 360 platform could help financial firms to be compliant with the DORA regulation. Over to you, John. Thank you.
Thanks, Vinod. DORA 360 platform is a cloud-based platform available on the EU cloud. It can be on a private cloud of the bank or the financial institution, or it can be implemented on a private data center. That being said, it makes it easier for a financial institution to adhere to the DORA guidelines within the given time. We're talking about less than a year to adhere to that. So DORA is a law compared to many other regulations that has come into the European Union. Being a law, it is replacing most of the regulations that are in place today, coming under the gamut of operational risk and resilience. Many countries in European Union had regulations in this space, but it's all getting replaced with this law now. So financial institutions may have some documentation or something in place to address the risk and resilience. The starting point is what we have done is we have studied this regulation in detail, looked at the 64 articles, the related control points, and made sure the interconnections, there are a lot of interconnection between certain articles, and there is guideline in place to say how do you control it. we come up with a control framework. This control framework has got the various checkpoints, and there are forms created for a financial institution to fill these forms collectively, get information from various departments, because it's not only from IT, you may have to get it from multiple departments. And when you collect the information, you're answering a set of questions and also uploading your current set of documentation. The documentation could be an incident management policy which is in place. It could be a business continuity policy in place. System looks at your responses and comes up with a score saying that how close are you to the DORA or what the gaps are. But the important point is when you're uploading a document, system has a built-in intelligence. That's where the generative AI comes in to look at what is in the document and read it in context to what DORA expects to have in the document. And it also shows what the gaps are within the document, which is a big enabler for the gap analysis and also to make sure what efforts to go in from there to completing the gaps. Having said that, once you know where the gaps are, then we move to the implementation phase. Some organization might have some technology in place for risk and resilience management or for third-party risk management. If it's in place, it's all about to go and make some changes in these technology systems to make sure it is aligned to the new guidelines which is coming. But there are two important aspects which are very unique to DORA. One being visualization of business processes. It says that the organization is expected to identify which are the critical operations. That's the term used. And there's a guideline in the regulation which helps you to identify the critical operations. But it's up to the organization to take a subset of that and visualize it. The other end of this is to report to the regulator as per a frequency which is already set in the law. So let's go to the next slide. The heart of this engagement is to visualize. So we got a tool to bring out a critical business service in an easy to understand format. That means with just boxes and lines. That means everybody in the organization should be able to understand how this critical business service is operating. And on top of it, superimpose it with IT systems that are used at every stage of this process. So there's a core application at stage that is running on a particular hardware. There are APIs connected to that, and there are third-party systems playing a role in this critical business service. Once you know what these are, that's the blueprint of your organization from the DORA point of view. Let's go to the next click. On top of it, as we have interconnected the articles and the control points, we can superimpose those control points into this critical business process and make it easier for the organization to see how am I compliant to different control points on these critical business services. Likewise, from this critical business service, we'll be able to take out the list of third parties which plays a role in that. That can be passed to the TPRM system, or we also provide a third-party risk management platform if it's not available in the bank, and that will give you the risk levels of this TPRM or the third parties involved in that. Having said that, incidents are part of the business. So if the incident is reported on a hardware, network, API, or the application, or any part of this ICT, and if it is related to this critical business service, we bring it in context to this. All this information come together, and there are particular frequencies at which you need to report it to the regulator, and the platform makes it much easier to address that. Let's go to the next slide. There's a big differentiation we are bringing here. That is the Gen AI. We call it as MACPI. It stands for Multi-Agent Prompt Engine. One big aspect of DORA is to continuously look at the policies, procedures, and the contracts. What we have done is we identified what are the clauses that should be there in various policies in the organization. If you upload an existing policy into MACPI, which is a generative AI platform, it will look into that document and see whether there is needed coverage for various clauses from the DORA point of view. And it'll throw out the list of gaps or the conditionality which is already there. That's the overall functionality. But the interesting part is organizations work with multiple vendors. And over a period of time, you would have signed a lot of contracts with these vendors. And now comes DORA. It says that every contract should have 10 to 12 standard clauses included in that. If you want to do it manually, it takes a lot of time for people to read and see how well the coverage is. pull these contracts into Magpie, it'll go and read intelligently these contracts, come out with a gap saying that what the gaps are. We move that into the next module in DORA 360, which will help you to include these clauses into the existing contract of a vendor and send it to them digitally, get their review, approval, comments, so that you can sign a new contract quickly. So that was a quick introduction to DORA 360. I will pass it back to Trevor.
Thank you, John. And this slide shows the kind of output you're going to be getting
Sure.
from the platform you just talked about. So I'm not seeing any questions coming through. Thank you everyone for your comments and thoughts and presentation today. I've got a couple of questions to ask just to maybe kick things off. So maybe this is one for John and Vinod. You're saying that the policies would be and procedures would be ingested by Geom, and using generative AI, you get those outputs that we've just seen. What goes on about data privacy? Because a lot of financial services firms are not going great guns on Gen AI because they have privacy concerns around their data. How do you preserve the privacy of a bank's data using this platform?
Great question, Trevor, because in Europe, there is a regulation around even the Gen AI or AI in general. So we need to look into that as well. So having studied that regulation, it says that certain type of things cannot be done using AI. So first of all, this doesn't come under that list. But that's not the comfort I'm bringing here. This Gen AI platform is not using a standard available Gen AI technology. So we have taken one of the existing ones and made it in a way that it can be on the private cloud of the client. If a client says that it's interesting that I need to make sure that this is not going to the public domain, you can have a Magpie version running on the private cloud of that particular client or on their data center, and you'll get the same output. So it's not opening up to the world.
Very good, thank you. I think I saw a question from Emmett. Okay, so where do we find more information on the criteria for assessing if a service provider would be considered critical? I know this is being reviewed by the EU at the moment, but maybe that's a question for Anthony. I know you've been looking at that recently. Any comments from you, Anthony?
Yeah, so there are three guidelines at the moment which are being used at a very generic level. So effectively, what breadth does the service provider, the supplier, have across the financial services marketplace in terms of number of clients? What level of money transaction value are they processing on behalf of that set of clients? And if there was a material impact on that service provider's ability to provide a service, how would they mitigate that across the European Union? So the obvious firms will be AWS cloud providers. If they're down, that'll have an impact on cloud service provision. Market data providers, core banking providers, investment management platforms are obvious. Outsourcing contractors, obviously, if they're providing an outsourced contract to manage the operation of a client as a third party, that will also be deemed to be a critical provider. So the guidelines at the moment are quite generic, but it's really how many firms are you providing the service to across the EU? What's the total value that is being processed in terms of AUM or transaction value? Is that a material amount that would have an impact on the EU to operate as a financial services centre? And how important is your service to the client you're providing it to? The financial services institution are obliged and are responsible for assessing who they feel are their critical service providers. And once all of that information is sent into the regulator, that's what they'll be using to assess and declare in June of this year who are the formal service providers that have to comply directly and be regulated directly. But then the financial services firms also need to make their own decision on who they also deem to be critical for them individually as an operator, and they take responsibility for the oversight, the monitoring, the exit planning for that particular vendor. And the vendors also need to do their own testing and submit those test results to the regulator every single year as well. So the onus is on the FSI at the moment, and then the onus will be on the suppliers who are deemed to be critical by the European regulator in 6 months' time.
Thank you, Anthony. That's great. So we can expect some kind of list being issued, right, of who those are. There were some numbers being touted earlier in this presentation. But that leads nicely to this next question from Michael about what's the reaction from the ICT third-party service providers to the introduction of DORA on operations costs, etc. I think it's really interesting what's going to evolve over the next 12 months, because organizations like this are not used to financial services like regulation, and so there's got to be an upping of game going on, and maybe there will need to be DORA type teams or chief DORA officers or sort of chief resilience officers getting a little bit more clout in the vendor space. But that's a quite abstract view. I've got no evidence of that happening.
I can probably add a bit more detail to that, Trevor, as well. Yeah, so for example, I was at a Phil Fisher seminar earlier this week in London, which had a room of about 50 suppliers. The question was asked by the legal firm, how many people in the room have actually started the process of looking at or acting upon DORA? 2 hands out of 50 or so went up in the room. And the lawyers were saying, look, the bottom line is the FSIs, your clients will start to reach out to you with due diligence questionnaires. There will be contract renegotiations, which will need to be executed this year. Expect that to happen. But also, primarily, no doubt, the suppliers will be passing these costs on to their clients. And of course, the big challenge for the FSIs, the actual end client here, is the cost of doing business is getting greater and greater every single year. And the key theme with DORA is using that word resilience. And, sort of echoing Trevor's comments, maybe there'll be a chief resiliency officer coming through the board level now, because resiliency is about saying we don't expect to see compliance standing still to this regulation. We need to see you improving your compliance. We need to see you improving your resiliency, because the cyber hackers, the internal fraudsters, the third parties that are trying to attack and kill your business, they're getting better at doing that every single year. So we need to see an improvement in your maturity of your risks, controls, resiliency every time we come back to audit you. So there's an ongoing process here of improvement, education, investing in technology to help prove to the regulator that you are improving your resiliency every single year they audit you as well. So there's a few factors there to consider.
Great. Thank you very much, Anthony. I don't see any more questions coming through, so I'll just raise one more back to John and maybe Vinod, just is many banks have already done some of the process mapping that you're talking about, right? The business workflow, tools like Appian, Monday, those kind of things will do that business process mapping. And by the same token, they've probably got an operational risk platform like Archer or something like that. So if that's the case, how does DORA 360 fit with that? Because you can't take over everything that's already been done. Are you looking at how you would integrate?
Okay, so the story is, if there is a risk and resilience platform like Archer or anything in place, it's more around going and making some tweaks around that. On that particular aspect, I was talking about 4 aspects to it. One is the risk and resilience, third-party risk, reporting to the regulator, and the visualizing of critical business services. So it all depends on what you have in-house. If you have some good tools already in place, go with that, make changes. But if it is not there, bring it out to a new platform which addresses the holistic requirement. And this is also an opportunity for the organizations to look at the risk and resilience in the modern world. At times, you see that legacy systems are being in use in the risk and resilience space. So it can be considered as an opportunity to move things. And because of the interoperability in the sector, if the processes are mapped in one system, Usually, if it is BPMN, it moves easily from one system to other, and that's how we are looking at the market shaping up.
Great, thank you very much. Any other thoughts or comments from the panelists here today to conclude things?
I think there is one more question which has just come in.
Yeah. Yeah, just to reflect back on that question, thank you, Emmett, for raising that.
Yeah.
So basically, there's two ways of looking at this. One is the European Supervisory Authority, the EBA, will be announcing in June this year who they deem to be critical across the whole of the financial services industry in Europe. That will be, the estimation right now is 9,000 suppliers will be in scope and will be deemed to be critical, will be regulated directly by that regulator, the ESA, in that region of operation. But also the FSIs also need to choose who they deem to be critical to their own business. That they may not be on that list of European defined critical service providers, but you may have an outsourced contract in place as an FSI that may be deemed to be critical. So if that outsourced contract failed or the SLAs weren't met, and that has a material impact on your ability to operate your business daily, you may deem that supplier to be critical. And in that sense, in that context, you are then responsible to ensure that you are monitoring, surveying, and have exit plans if you choose to move away from that supplier. The supplier themselves also have to do tests and prove those tests to the regulator as well. So there's two levels of criticality. There's the industry-wide criticality as deemed by the EBA, and there's also at the firm level, this particular outsourcing provider who I'm using, I deem to be critical to my business operation. I'm responsible as the FSI to manage that relationship, to mitigate any risks in that relationship, and to monitor the ongoing performance of that relationship as well. So it's at the macro level and at the micro level.
Great stuff. Thanks, Anthony, for clarifying Emmett's great question there. Look, I'd once again thank you everyone for joining today. Particular thanks to the presenters here, Anthony, Vinod, and John. And as I said, we'll be in touch with more of these kind of events through the year. Thank you very much for joining.
Thank you.
Thank you. Goodbye.